Good evening, Dr. Agnes. My name is Norasra binti Bait, and today we will be discussing Article 1, which is Strengths and Weakness among Malaysian SME from the Financial Management perspective. So let's go through the SME definitions. The SME definitions can be categorized into two parts. The first part is manufacturing, where the sales turnover are not exceeding 50 million and the full-time employees are not exceeding 200 workers. The second part is service and other sector, where the sales turnover are not exceeding 20 millions and the full-time workers are not exceeding 75 workers.
Good evening, I'm Alvinia Tabak with matrix number 2017397587. Table 4 is the extract from the article. It shows the result on the financial weaknesses. Based on the financial weaknesses, the capital insufficiency is the highest weaknesses among SME, which is small and lack of capital with 40%. Another weaknesses in SME are incomplete accounting record, financial performance, loan difficulties, and last but not least are high operating costs and collection problems with 7% each. From the conclusion of the article, it states that capital is the most critical financial component among SMEs, and it is advisable for SME planning to do an expansion to inject more capital to accommodate the expansion, which is why in these slides we will discuss more about the working capital, the sources of financing, and the measures to ease financing of SME.
Good morning to Dr. Agnes. My name is Senitan with student ID of 2017725823. Today, I will be presenting the advantages and disadvantages of working capital and two of their sources of financing in SME company. So, the first advantage is it eliminates collateral. The biggest advantage of working capital loans is that they are unsecured. For most loans, pledging collateral is essential as it acts as an assurance of repayment. However, this isn't ideal as it puts your business assets and personal values at risk. Working capital loans save you from this hassle. Second advantage is it maintains the cash flow of the company. It is irrespective of your requirement and monthly revenue. Working capital financing helps maintain good cash flow for your business. This means that your business gains stability and finance strength for urgent or unexpected needs. The third advantage is that the working capital makes it easier to get financing. As an SME company, the company can easily apply for a working capital loan online and will have to submit only a few documents. As a result, the process is easier for the company and funds are disbursed faster. However, there is advantages in working capital if the company is an SME company. An SME company may be hard to attract investors. A small business that lacks sufficient working capital may find it difficult to attract investors and lenders. Working capital shows investors and creditors that a company possesses the ability to pay back its loan or can earn a sufficient profit that allows investors to earn a return on their investments. For their day-to-day operation, working capital measures a company's ability to turn short-term assets into cash. A lack of working capital may jeopardize a company's ability to finance its day-to-day operations. Day-to-day operations is a small business typically includes salaries, inventory purchases, and equipment needs. A lack of working capital also makes it difficult for a company to prepare for emergencies. SME companies also have difficulties to grow their business. A lack of working capital hinders a company from acquiring what it needs to expand. If a company continues to experience problems with growth, it may find itself losing customer competitors. Next is about the sources of financing for SME company. There are 4 sources, but I am going to present 2 of the sources only. The first sourcing is factoring and invoicing discounting. Both of these sources of finance effectively let a company raise finance against the security of their outstanding receivables. Again, this finance is only short-term and is often more expensive than an overdraft. However, one of the features of these sources of finance is that as an SME grows, their outstanding receivables will grow, and so the amount they can borrow from their factor or from invoice discounting will also grow. Hence, factoring and invoicing discounting are 2 of the very limited number of finance sources which grows automatically as the business grows. Other than that, leasing is also a source in financing for SME company. Leasing assets rather than buying them is often very useful for an SME as it avoids the need to raise the capital cost. However, leasing is only really possible on tangible assets such as cars, machines, and etc.
Another source of financing is from the venture capitalists. A venture capitalist company is very often a subsidiary of a company that has significant cash holding that they need to invest. The venture capitalist subsidiary is a high risk, potentially high return part of the investment portfolio. Hence, many banks will have venture capitalist subsidiaries. In order to attract venture capital funding, an SME has to have a business idea that may create the high returns the venture capitalist is seeking. As such, for many SMEs operating in regular business, venture capitalist financing may not be possible. Next is the source of finance from owner, family, and friends. This is potentially a very good source of finance because these investors may be willing to accept a lower return than many other investors, as their motivation to invest is not purely financial. The key limitation is that for most of us, the finance that we can raise personally and from my friends and family is somewhat limited.
We move on to measure to ease financings of SME. First one is providing grant. Government have provided many grants through government agency. Any business owner can apply as long as the requirements are being met. The second one is providing tax breaks. For instance, in Malaysia, SMEs are eligible for reduced corporate tax 70% on chargeable incomes of up to 500,000, while the tax rates on the remaining chargeable income is maintained at 24%. The third one is guaranteeing loan. For instance, for a small fee from the SME, a large proportion of any loans advanced by a bank is guaranteed by the government, as this is significantly reduce the risk to the bank. They are potentially more willing to lend. Working capital guarantee schemes applicable for small all sector which at least 51 shareholders and controlled by Malaysia. The fourth one is providing equity investments. Many countries have governments backed ventures capital organizations that are willing to invest in the equity of SMEs. This is often done on a matching basis, where the organizations will match any equity investment raised from other sources. Next, we move into the second measures is of financing, that is from BNM, Bank Negara Malaysia. The first one is key fintech. Enabler a building block to support innovative solutions such as open API standards for financial institutions and fintech company to seamlessly to communicate and exchange information via open data. The second one is IMSME, online financing platforms that match SME to the most suitable financing product out of 37 offspring by 22 financial institutions, and CGC as at 2018, 47 million was approved to 405 SME. The next one is collaborations with the Malaysian Institutes of Accountants on a new training models on the financial management for SME to prepare financial statement for loan application more than 100,000 SME and benefit to in 2018. The last one is Credit Guarantee Corporations, scaling up startup financing in Bismula I and Biswanita by utilizing BNM fund to provide financing to start up the growth potentials.
In conclusion, efficient working capital management is a very important component of sustainable growth in SME. Thank you.